It is almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Here are the top stories. Hong Kong stocks plunged despite the post-holiday euphoria on the mainland. The CSI 300 also paring early gains as the NDRC's news conference fails to add fresh stimulus. Broader Asian stocks under pressure, falling losses on Wall Street driven by a tech sell-off, Middle East tensions and bets on a smaller Fed rate cut.
And I'm Annabelle Drawlers, live in Taipei for Hon Hai's annual Tech Day. The company best known for building iPhones now looking to AI, EVs to be the next drivers of growth. This hour we'll hear from Pininfarina. It's a legendary Italian design firm helping Hon Hai make its EVs stand out in a crowded market.
All right, in the markets, gyrations when it comes to those Chinese stocks. We have some reversal in sentiment after gaining as much as 11% at the open. The CSI has given up about half its gains already. The NDRC session, as we said, a big disappointment for investors. No big stimulus, nothing meaningful. What we did hear, however, is that China will keep using ultra-long sovereign bonds. That's according to the NDRC. China will hasten progress on fiscal spending. It will focus on consumption, and other housing policies are also being planned, but all short on detail. CSI 300 index currently up by about 4%. Let's get to our China correspondent, Min Lo. She's joining us now, also in Hong Kong as the China Show co-anchor. David Inglis. David, of course, huge disappointment, but bear in mind the expectations were sky high leading up to the reopening today. Take us through the market reaction.
Absolutely. In fact, we need to take you back about 3 or 4 weeks to, I guess, understand the context why market expectations have been, elevated to this point, right? When we heard that initial briefing about 3 weeks ago from the PBOC at 9 a.m., rare joint briefing, and then the market rally that ensued following that, you do understand why going into this specific briefing, almost chapter 2. And I think Min will talk more about what was lacking and, just contextualizing, of course, and who was there and what they could say. You do understand why markets were somewhat, I guess, disappointed. I need to caveat this as well, right? So there are two almost mechanical dynamics at play here, two sets of mechanical dynamics at play. One is a Hong Kong market which has rallied, depending on which index you look at, 30 to 40% in some cases. Going into today. So you understand why the itch was there to take some profits and maybe to fund the rally we're seeing onshore. That's number one. Number two is really onshore where things have been shut for about a week. The initial minutes right after the opening bell saw the benchmark gain 11-12%. That's a CSI 300 where every single stock was up. Since that point in time, we've seen things pare back a little bit, So I guess in some ways it was expected to see, well, it's not surprising to see Hong Kong pulling back given how far the rally has come. And it's unsurprising as well to see still some gains onshore as we go into the latter part of the morning session has.
And we're seeing the CSI paring back further, currently up by 4.8%. Min, put that disappointment in perspective for us when it comes to that press briefing.
Yeah, the tone at this briefing is really quite different from what we got from the PBOC before that holiday where we had those big bazooka monetary stimulus just announced right at the start of the briefing. This one was more like a traditional Chinese-style ministry briefing where the officials spent quite a bit of time at the start just recapping the state of the economy, and then we got a drip feed of measures that includes more focus on promoting consumption, and that include, for instance, more subsidies for students, measures to boost the income for low and middle income groups. For the private sector, the government will extend loan support for mid-sized firms and also release a new negative list for foreign excess. But I think what's most notable is the officials mentioned about quickening fiscal spending. The NDRC is urging local governments to finish issuing all the local government bonds by end October. 90% have already been issued by end September, by the way. But this this urgency to issue all those bonds by end October, that perhaps open up some room at the end of the year to issue more bonds if the authorities so wishes to. There was also an announcement that 100 billion yuan worth of investment plan for early next year, and ultra-long sovereign bonds as well. A little bit of mention of the property markets, but it was mainly recapping what has been said so far. They said there will be more measures in the pipeline, but not a lot of details when it comes to that. So yes, markets a little bit disappointed. If you look at the major gauges, they're paring back about half of the gains that we have seen since the early morning.
And you know, David, we've also talked about the skepticism from the likes of Nomura from HSBC. And on the other hand as well, investors are waiting to see how those stimulus which have been announced so far will play through, including in the markets.
Absolutely. I mean, looking at just the magnitude and how quickly markets have, I'll use the word reset, and I'll talk more about reset in a moment. You know, at some point, the market would be running into either a bad set of economic numbers, still soft earnings, for example, and at some point, you know, everything that was announced so far will take time to simmer into the economy, right? But you know, we don't have the luxury of time. You know, in about 10 days or so, we get the activity numbers for September coming through. And then we move into earnings season, which, you know, arguably we don't have enough runway for this to really filter into corporate guidance. Now, all that being said, right, the reason I used the word reset was at least people are now looking and asking about China, right? Whether that's your global investor putting their queries in. We just had UBS joining us about an hour back, and they at least are getting questions right now on China. Onshore, the question is, to what extent should they be deploying the retail investor money back into this market? And our previous guest in the last hour of the show anecdotally said, you know, they're looking at 3-4 million new brokerage accounts that were opened going into the open today. I'll end on this. The reset has taken valuations back from an extremely cheap level of, you know, trading 1 or 2 sigma below your 10-year average. And we're actually now back on MSCI China, actually now back to your 10-year average, right? So at this point, the question becomes, now that we're back to the average, what's next, Has?
That's right. And even then, against a backdrop of little conviction, Bloomberg China Show co-anchor David Inglis and China correspondent Min Lo, we thank you so much for your insights today. Let's get more perspective. Joining us now, Karen Harris, Managing Director at Bain & Company's Macro Trends Group. Good to have you, Karen. I mean, how are you assessing China right now?
Well, I think we need to separate the longer-term goals from what's happening in the short term in the equity market. In the long term, she's not really worried about growth as much as stabilization. There's a strong set of more national security-oriented goals around chips, less U.S. dollar dependency, supply chain resilience. But in the near term, we were reaching a crisis of confidence. And the large measures that were taken right before the holiday were trying to create to stop a doom loop of falling sentiment. And I think that's the explanation for why they were so large. They succeeded in in stopping that momentum. And now, unless we see that sentiment fall again, I would guess that there's a sentiment that there's no real need to intervene at that same level, which is why we're seeing less excitement today.
The thing is, Karen, can you actually draw a distinction between near-term and longer-term perspective on China when Xi Jinping himself talks about a 100-year storm? If you do want to take a longer-term perspective, where do you see the opportunities then?
Right. So equities are not a very important part of in the grand scheme of things, not a really important part of the Chinese economy. Where the challenges have been, of course, is the property market, which reached about 25% of GDP starting in 2021 with the 3 red lines. We've seen the effort to cool that down. But the way we think about it is it's like a very, very hot glass. If you want to cool it down and you drop it into a bath of cold water, it shatters. And so there's been an effort to shift the economic focus away from property to cool that down without creating a sort of catastrophic unwinding. And that is in efforts to, again, research, to move credit, to move economic focus out of property, out of the financial economy into more real fundamental sectors. And that, I think, is part of that 100-year vision, the creating goods, having advances in technology. She is a techno-utopian in many ways, really investing in the technologies of the future. And that is not going to happen through apartment buildings.
But I guess the concern really is housing is a huge part of the economy, and it remains in the doldrums, even as they talk about other housing policy being planned or being implemented. I mean, it's really an issue that's yet to be addressed.
Yes, it's a challenge because, of course, if housing is for living in, where do people put their savings? And that's been that suppression, that lack of savings opportunity has resulted in low consumption domestically, that being dependent on consumption abroad through exports. That was in Europe and the US, now looking at the global south. So balancing that is difficult. And I think we can see that the recent measures have been an effort to put a floor under property prices in a managed growth slowdown and turn without creating, again, a catastrophic loss of confidence and an unwinding.
Given what we have heard from the NDRC, given the stimulus measures that we have seen in the past few weeks, are you more encouraged?
I don't, it depends on encouraged what seat you're sitting in and what you're looking for. As equity investors, I think these have all been short-term trades. So I don't know that we'll be, if we look at the beginning of next year, if we see those same gains. And of course, as you've just pointed out, many of the gains have already been eroded over time. So if you're skating in the equities market in momentum, that's a very different situation than where would I invest fundamentally in China. And I think from a real basis, they're clear winners. China is dominating the global EV market, for example, the best vehicles on the planet for the price, lots of innovation happening there. So from Bain & Company's perspective, we really think about what are the sectors and businesses that will be those long-term winners. The clients we work with are looking in 3, 5, 10-year time horizons, which is very different than the kind of buoyancy and lack of buoyancy we see in the equity markets. That's much more attuned to the stimulus packages that have been issued recently.
Karen, hang tight. Karen Harris, MD Macro Trends Group at Bain & Company. Still to come, we're live in Taipei, where the world's biggest iPhone assembler is set to unveil a new EV as it seeks to diversify its growth engines. More from Hon Hai's Tech Day later this hour. Keep it here with us. This is Bloomberg. With oil dipping below that $80 a barrel and China disappointment, questions about its demand outlook. Of course, China is the #1 importer of oil. Still in focus, though, escalating tensions in the Middle East, raising speculation Israel may attack Iran's oil infrastructure. Brent crude down about 1.5%. New York crude also down as much. Take a look at Brent, just under that $80 a barrel level. Well, still with us is Karen Harris, Managing Director at Bain & Company's Macro Trends Group. And Karen, of course, the trend here is, of course, the uncertainty in the geopolitical environment. we've just lost Karen. We'll try and take a look at where we are in terms of that link with Karen Harris. For now, though, of course, we've been talking about Brent crude dipping below that $80 a barrel and that disappointment with China. Questions about that demand outlook. Of course, China has failed to give any meaningful indication in terms of what it intends to do to further prop up its economy and reverse that negative sentiment. We'll go for a very short break. Keep it here with us. This is Bloomberg. Welcome back. Taiwanese industry giant Foxconn is holding its annual Tech Day in Taipei. The company, known formerly as Hon Hai, is the largest contract electronics maker in the world. Now it's pushing to diversify and build more future-proof income streams. Well, our tech reporter Annabelle Drules joins us from the event in Taipei. Belle, what's the mood on the ground?
Well, it's a really exciting day for the business here. It's their 5th ever Hon Hai Tech Day, but it's also the 50th anniversary of the company this year. And one of the highlights we've heard so far from Chairman Liu is talking about building the world's biggest supercomputer facility right here in Taiwan. And as I was saying, it really speaks about sort of the goals of where Hon Hai wants to go from here. It's known as the world's biggest assembler of iPhones and a range of other consumer electronic appliances. We know sales of those are slowing, so Hon Hai needs to think about what is next. So essentially, the focus is building out this EV ambition, also smart manufacturing, smart cities as well, trying to develop these additional business streams for the company. But EVs has been really one and particularly interesting, of course, given that the company has very big ambitions in this space, around 5% of manufacturing share for global EVs they want by 2025. Whether that's possible or not, definitely the man leading that effort, Jun Seki, is saying that they will make every effort to get there.
Belle, what are you looking out for? What's been the most exciting?
Well, I think really it's about those EVs in particular here today. Of course, you can see that range of lineup behind me. We just had 2 new vehicles announced in the last hour or so. What else is really interesting is just off to my left, which you can't see, but that's the supercomputer facility. And of course, we just had those results from Hon Hai for the 3rd quarter over the weekend, and they really just told us how much this company is continuing to gain a market share in AI servers in particular. So it's working with the likes of NVIDIA very closely. Of course, it's trying to impart its design knowledge in the build-out and this design sort of specifications for AI servers. It's making those and it's sending them off to the hyperscalers, the likes of AWS, Microsoft, Apple as well. All of these different ones that are involved in the process. Very big business for the company. They're saying it's got a lot further to go from here.
Belle, thank you so much for that. Now to another top tech story we're tracking right now. Samsung shares slipping after its preliminary 3rd quarter earnings miss expectations. The company issued a rare apology for the weak result, an unusual admission that it's grappling with potential crisis. The world's largest memory maker is now playing catch up to its rival SK Hynix, which took the lead in producing chips used in AI applications. It's also begun laying off staff as part of a plan to reduce its global headcount by thousands. Taking a look where we are in terms of how those wider Asian chip makers are doing right now on the back of news out of Samsung. This is how it's looking. We know Samsung Electronics down. On the news, we have Hon Hai also trading lower right now. We have SK Hynix down by almost 3%. SMIC continuing its trend downwards, down about 9%. Remember, the SMIC has been smacked in recent sessions. In the broader market, this is how it's looking. Of course, China front and center. We've been talking about the gyrations in the market. China's stocks giving up some of those gains. In the early session, we saw how it was up by about 11%. Asia, on a whole, under pressure. There you have it. We have China CSI 300 index currently up by about 6% as we speak. Well, let's get to our guest, William Ma, CIO, Grow Investment Group. He joins us right now. William, give us a sense of how you're reading in terms of the movements in the Chinese market right now.
Well, it's a very volatile and exciting time. I believe the domestic Chinese, in particular retail investors, is having a very high expectation. If you look at last week, the ETF in Hong Kong, when China Asia market was closed, is trading at 10 to 20% premium, meaning that people are expecting 10+% rally in the Asia to catch up on the HSI. So what happened this morning, I think, reflected part of it is over-expected. And the potential disappointment is coming from lacking of a high-level figure, no matter it's 1.5 or 2 or 3 trillion of physical stimulus. But my expectation is later on today, this afternoon, on the next 2-3 days, sentiment will, come back when more details and the figure being announced.
So, William, given those expectations, would anything be a buy?
Well, actually, it's already buying. I think the devil is in the details. If you look at some of the brokerage company, historically, when China Asia market rebound, those brokerage security companies, they are having a kind of like call option return profile. If you look at some of the Hong Kong and US ADR listed brokers, they were already up 100%, over the last 2 weeks or so when the China market was was closed down. So basically, the China Asia brokerage, all the 50 China broker, they are all limited up, today playing catch up. So I think sector specific, there is always a buy, but I think on the index level, it would be kind of like volatile, when more policy details to come out.
In the end, William, it will have to be about fundamentals. Are fundamentals in China supportive of the view that you hold that perhaps we'll see gains later on?
Yes, I would say in terms of consumption, that is the key, for the kind of like October, National Day spending. When I talk to my friends, I think people are spending more, in expectation of the equity market, wealth effect coming up. And then the second, in terms of company fundamental, if you look at the global and local brokers, actually I see earnings upgrade, from some of them, in particular in the security sectors. But at the end of the day, the macro fundamental economic figure like September has been very weak, the PMI and CPI. So I believe, we need a month or two for confirmation of the fundamental coming back. But I see more opportunity on the upside rather than downside, given the iconic kind of like policy direction change.
Would the rotation into Chinese stocks be at the expense of China bonds?
Yes, I think if you do a survey, which we also asked about the institutional investor in China, one of the worries that they had is the Chinese investor or the institutional investor will sell government bonds and then to long the equity, which, cause a collapse of the potential, risk rotation. I think PBOC did a good job in doing that, trying to let the bond being leveraged pledge, for equity. So we are not seeing a sharp selling in this morning, but potentially this rotation could be a risk, down the road to reach. I would say equity has more upside, if the policy direction continue rather than the bonds in China market.
William, when it comes to HS Tech, what a run. And you know what? What a downside as well. We're seeing it on set to post its worst day since its inception. I mean, is this a surprise?
Well, yeah, it's a yo-yo, if you talk about Hong Kong tech company. But realistically, I see the differentiation. Guys like, Tencent and Alibaba, I think they are a more long-term buy, but the other tech is kind of like risk on and risk off. I would say at this point, for global investor, it would be better to look at, manufacturing or white good manufacturer. For example, you look at Nvidia, has been go up a lot, and then when the Hong Kong market is down and the tech index is down, it's only down 2 to 3%. So I think that is a better sector to be in.
William, hang tight.
Yep.
William Ma, CIO, Grow Investments. Stay with us. Plenty more ahead. This is Bloomberg. China markets just heading to lunch, and what a day for China stocks. Gyrations not for the faint-hearted. The CSI 300 index currently up by 6% as we speak. Remember that it opened up by as much as 11%. Disappointment when it comes to the NDRC. Of course, expectations were sky high. Disappointment was kind of expected, but that volatility, oh wow. Well, we're back with William Ma, CIO, Grow Investment Group. William, we talk about gyrations in the market. Talk to us about the spreads between A and H shares. How are you reading that?
Yes, I believe the spread will narrow down as we speak. I think the Shanghai index is coming back again, and we have to remember there is no limit up, limit down on the Hong Kong shares. But for the China share, the main board 10%, the small cap 20%. So as best as you can go to up 10% for the China A share. So we expect the spread will be narrowing down a little bit when the retail investors start digesting the details meeting, notes.
Right. William, how best do you gain exposure to China?
I'm sorry, can you come again on the question?
William, how best to play China?
Hello, sorry. Can you come again on the question?
Sure. William, how best do you play China? How do you invest in China best?
Yeah, I think the best play to play China is two things. One is the focus on the brokerage, security sectors, which I think turnover is going crazy, accounts opening, and I expect that will continue. Number two is global companies, happen to be Chinese company, like the manufacturing sector, like the media, which I think if you look at the details, their second listing in Hong Kong, 35% of their proceeds is for global R&D, 20% is for global expansion. So they are the largest, manufacturing of white goods manufacturer. So I think it's a triple, play, for Chinese company playing local and global. Those are the two sectors that we think reasonable. And as reflected in the share price, when the market correct, I think they're holding up very well.
I think there's now concern because we heard earlier at the NDRC briefing that the moves by the PBOC, for instance, is not meant to prop up the stock market. I mean, might the stock market be expecting too much and derail your own expectations as to where Chinese stocks are headed?
Yes, I'm glad they mentioned that because, to be honest, the nature of the China retail investor is very aggressive, and also when the Asia market become a bull market, it will go up quickly. If you look at 2015, the bull market lasts for only 2 months. So I'm glad they bring this up, and there are so many new accounts being opened, like 3 million, retail. So I believe that is a very good message to be sent out, and hopefully there are more policy detail coming out and let the institutional investor drive the market rather than the retail.
How about the swap facility that was mentioned?
Sorry, can you come again?
William, how about the swap facility that was mentioned? I mean, to allow shareholders to perhaps buy back shares?
Yes, I believe the swap facility is positive, but, it do not create a very kind of like powerful buyback mechanism, if you like. At the end of the day, people are watching the mid to large cap, in particular large cap. So I think the swap facility would help, but at the end of the day, the buying power of that is not very large. It has to be from the mutual fund community and insurance company to drive the market. It's not the listed company who do more buyback. It would help sentiment, but this is not the key focus issue.
William, great insights, and thank you for joining us. William Ma, CIO, Grow Investment Group. Let's do a check on Indian markets as we head towards the start of the trading day. India starts trading in 10 minutes or so. Nifty futures pointing to a higher open, up 0.3%. Of course, India has had a bruising week last week. The RBI rate decision later this week might also influence sentiment. It will guide the trend in bonds in particular. In terms of the Indian rupee trading at 83.96 flat versus the USD. Well, Indian payments company MobiKwik reportedly received approval from the markets regulator last month for an IPO. That's after filing for a listing for a second time back in January, aiming to raise around 7 billion rupees or more than $83 million. Is going to update on those plans. Upasana Thakur is co-founder of MobiKwik and joins us now in the studio for an exclusive. Good to have you with us.
Thank you
so
much.
Confident that IPO will come through.
Yes, absolutely.
What kind of reception are you anticipating?
Much stronger, and we've also changed as a company a lot in these last 3 years. 2021, it was a very volatile market in India, and it was also the first time tech companies or consumer internet companies were coming for a listing. And so valuations were quite bubbly. Investors were chasing growth at all costs. Since then, last few years have seen investor mindset change to profitability and long-term sustainable growth. As a company, MobiKwik has diversified its revenue streams from consumer payments to merchant payments to distribution of financial products. And we've also scaled our revenue 3 times, and we have turned profitable. So for our last financial year, which ended March of 2024, we have done a revenue of $111 million US. And on that, we have delivered an EBITDA of $4.5 million. So we have turned profitable. We are the only profitable fintech in India today. So I believe that is helping us garner interest.
You have turned profitable, but it is a small profit. How do you ensure that you build on that profit? What is the strategy?
So good question. I think India is a very large TAM for financial services. We are a country of more than 1 billion people. And while we have bank accounts for 850 million Indians, in terms of financial products have only reached about 100 million Indians. So there's a lot of opportunity for us. We have grown this past year about 59%, and we intend to grow about 50 to 60% for the next few years also. So how do we do that? We scale our platform. So we are currently at 161 million users. But last many years, we've been adding anywhere from 15 to 20 million users every year. So we scale up in terms of number of users. We scale up in terms of number of merchants. So therefore, we scale up the existing products in the payments portfolio, consumer credit, merchant credit portfolio. And we are also bringing new products to the market. So just this year, we have launched a very exciting new product called Pocket UPI. This is the first product in India where you can use wallet to pay on the entire UPI network. So for all your daily life payments, you don't need to clutter your bank statement. You can pay from a wallet, keep your bank account safe. And this is giving us a lot of growth. Just to give you perspective, as per the RBI published data, our market share went from 11% to 23.9% between March to August of 2024. In terms of the total spends happening on the wallet platform.
Well, the thing is, Upasana, you can't charge for your UPI transactions. How then do you make money?
You're right. You can't charge for the UPI transactions, but as part of the payment spend, there are also wallet transactions. And interestingly, you can charge on wallet. We charge an MDR anywhere from 1% to 1.4% to the merchants, and that forms our main revenue stream. There are some use cases where the user is also paying a convenience fee to use credit on the network. On UPI, we have very interestingly, we are going to launch at Diwali a RuPay card in participation with NPCI and the State Bank of Mauritius. And this RuPay card also has an MDR. And these 2 products, Pocket UPI and our RuPay card, it's called the first card for every Indian. These will help us scale in the UPI market share and also earn MDR while doing so.
The thing is, as you plan to list, there's greater scrutiny in the company as well. Are there changes that need to be implemented at MobiKwik?
So currently, MobiKwik has 5 licenses. India is a well-regulated market. 3 from the Reserve Bank of India, 1 from the Securities and Exchange Board, and 1 from the insurance regulator. All these licenses require monthly reporting and annual audits and inspections. Currently, we are up to date on all of our licenses. But yeah, as a fintech company, we have to be adaptable and we have to keep improving on our compliance structures as per the new notifications that keep coming from our regulators.
It is a highly competitive space. Paytm, Google are all playing in the same space. What's the strategy to, I guess, fight with these players?
No, absolutely. So I think our play has always been to a focused company from a strategy perspective instead of trying to do this, that, and every business. in the payment space, you rightfully said there is Google, there is Paytm, there are others, and many of them have focused on vanilla UPI growth, which is pay from your bank account to any merchant where there is a QR code. Our point of view is that this whole vanilla game has been done to death. So the only way for us to make a dent in the market is with differentiated product offerings, which is why I mentioned our Pocket UPI offering, where a user is paying from a wallet, not from their bank account, on the UPI network. Nobody else is doing this. And the card that we are launching, again, is a very differentiated offering, and none of our peers have yet done that. So our view has always been to innovate and bring a stronger value proposition to the user instead of building the business on the back of incentives and cashbacks.
And we look forward to your IPO, and you have to come back on the show when that happens. Upasana Taku, co-founder at MobiKwik. Well, we're still counting down to the India Open now. In just under 5 minutes, here's how it's looking ahead of that Open. Sensex index pointing to a lower open down 0.2% at this point in time. Nifty futures, there you have it, currently down up about 0.4%. And coming up, we're heading to Hon Hai's Tech Day in Taipei to speak with the Italian auto designer that collaborated on the firm's foray into a crowded EV market. This is Bloomberg. Taiwanese industry giant Hon Hai is holding its annual Tech Day in Taipei. The company, best known for assembling Apple iPhones, has ambitious growth plans in the growing EV as well as AI spaces. Our tech reporter Annabelle Drulis looks at the challenges ahead.
iPhones, the Kindle, Nintendo Switch, even Ring doorbells. Foxconn is making these and more. Assembling the devices mostly in China has allowed the company to build an enormous business, generating nearly $200 billion in revenue last year. But the market for many types of electronics, and particularly smartphones, is maturing. Foxconn wants to move up the value chain to products that generate better profits. AI servers is one area where it's making progress. Sales have risen as Foxconn works with the likes of Nvidia, Microsoft, and Amazon on artificial intelligence infrastructure. Semiconductors is another field with a focus right now mostly on older, less sophisticated chips. At present, these mostly go toward in-house needs, including EVs. This is an additional space where the Taiwanese company wants to compete. With a value proposition similar to what it once told Apple, Foxconn can build part or all of your car in less time and at lower cost.
We believe this contracted and design manufacturing service go same way as smartphones and laptops. So we will have 40 to 45% market share in the futures.
Goldman Sachs says EV outsourcing could be worth more than $140 billion by the end of the decade. But with Foxconn still to sign on a major customer, its grandest auto ambitions are yet to be realized.
All right, let's show you pictures of that Hon Hai annual Tech Day that Annabelle has been talking about. Lots of excitement there. We're looking at live pictures there where Foxconn CEO is presenting on stage. It is showing its new models, which it hopes will do well, unveiling those new EV models, a collaboration perhaps with Pininfarina on that EV model. Let's get back to Belle. She's standing by in Taipei with a man who runs car designer Pininfarina, which partnered with Hon Hai for its new EV launch. Belle.
Thanks, Has. Yeah, you really could not have timed this better, actually, because we've got the Model D just being unveiled on stage. I've got the man here who is behind the design of it, the CEO of Pininfarina, Silvio Angori, joining us. So I want to talk about that process of working with Hon Hai on this. How many months is it in the making, and what sort of design features are you thinking about here for this vehicle in particular?
Well, you see, when you design a car such as this one, it takes not that long, because the idea was very clear since the beginning. The mission of the vehicle, the intent of the vehicle, the technology that has to be used, the service that we wanted to offer and the experience most important that we wanted to offer to the end user. So it has been a very nice journey, very short journey, but it is something that we are used to with Hon Hai, with Foxconn.
Yeah, actually, I want to get more on that sort of timeline, because we spoke with the man who's leading the efforts from the Hon Hai side, that's Jun Seki, and he said that he kind of wants things in a very short time frame, like we're talking about months here.
Oh, yes. Yes, we're talking about months, because, as I said, once the idea is clear, it doesn't take very long. It might take 3 months that you have the first model, the clay model, so something that would enable you to evaluate proportions and volumes and so forth. And then, normally, after 6 or 7 or 8 months, you have the first prototype running.
This is a very, very big project that Hon Hai is taking on in the EV space. It's an extremely crowded market, and there's a lot of expectations on this particular business unit to be able to drive Hon Hai into the future, figuratively and literally speaking. But how different are these vehicles for the consumer? Like, is there any point of difference that we're seeing here?
Well, you see, what I think Hon Hai is bringing here in this market is an ability of producing, in this case, products that will be in millions per day. That is the major difference, I think, because the experience that Hon Hai have gained in the consumer electronics world is massive, and is going to be making a difference in the industry, no doubts. The smart manufacturing, the ability of thinking differently, the use of artificial intelligence in smart manufacturing, these are all elements that are making a major difference.
The market that's really leading in the EV space, though, is China. How much do the car makers that are outside China need to catch up, really, when it comes to the technology and the features of these cars? Because the innovation, in a way, is also being led by the mainland market.
That is very true. I think you see China is leading the path. No way, no doubts about it. But the train has left the station, as we used to say in Italy. So that means that they can't be stopped. And therefore, everyone has got to catch up on that technologies, no doubt. I think it is the future of the world is relying very much even on electric vehicles, electrification in general terms. It might take a bit longer than expected, but we will get there.
What areas specifically do you think that EV makers outside China need to catch up on?
Well, certainly on the battery technologies. The infrastructure of recharging, that is going to be key, because people still have in their mind the hurdle of recharging on time. Autonomy, the increase of autonomy, that is going to be the differentiating factor, I think, for everyone. And certainly the network of infrastructure will again be very relevant. There are certain countries in Europe that are still far behind, and they need to catch up if they want to adopt and respond to the market needs. Additionally, I think what is going to be making a big difference is cost. The cost of the vehicles. China products are, I wouldn't say less expensive, not cheaper, but less expensive than other brands outside of China. This is, I think, where the Western world has to catch up.
On cost, this is an area where Hon Hai is saying that it can actually give an advantage to other businesses, because they're essentially saying, well, we could do it for PCs, we can also do it for vehicles. Do you see that argument making sense?
Yes, it makes lots of sense, because it's the way in which you define the manufacturing process that is going to be different. Think about the mega presses that were announced a few years ago that now everyone is adopting. So in other words, you have these gigantic presses that are pressing, stamping parts, diminishing the level of complexity of the tooling and of the manufacturing process itself. This is where you take out costs in the process. And I think that Hon Hai, from my own experience, from what I've been able to see, they are mastering all these technologies. It is incredible the number of patents that Hon Hai possesses and develops every year. that is going to be making a difference, I think.
You've got to play it at sort of both ends of the market, because you're talking about sort of the lower end, but the Battista brand, which is the Pininfarina one, where vehicles are selling for millions of euros. What sort of demand do you see at the top end of town?
Well, you see what I think that the market is going to be polarized. There will be the cars to be used over weekends, and there will be cars to be used from Monday to Friday. The mobility services are going to be different because of the needs of people. So there will always be the market for the high-end segment of the market, the Battistas and the likes, and instead the cars that will be serving the very simple purpose of moving people. And you see, people want to get through an experience while they use a car. This is where the designers will be making a difference, and this is where the world is trending towards.
Your owner, though, is an Indian company, Mahindra. Are you planning to do any of the construction of those vehicles inside India, or are you looking at expanding your production base there as well?
Well, we as Pininfarina are producing only a few dozens of cars per year, and we will make them in Italy, where the craftsmanship is at its best. And if someone buys a car from an Italian brand, they want to have that car manufactured in Italy.
Makes sense. Last question around, you were talking about sort of the Monday to Friday car. I'm wondering what your view is on the rollout of robo-taxis and whether you see that being a sort of near-term reality.
Well, when you think about autonomous cars, I think that the first adoption would be robo-taxi, and it would be in lorries, in commercial vehicles. I believe that there will be still more years before we as individuals will take a car and drive on the standard roads. At the beginning, I think we will be safer if we will use them as taxis.
All right, Silvia, thanks so much for your time there. That was Silvia Angori, behind Pininfarina, the CEO of that company, and the one that's also been designing some of the cars that have been unveiled here today at Hon Hai Tech Day.
That's right, Pininfarina, Bell. We know that it is behind those designs of those dream cars like the Ferrari, Maserati, Rolls-Royce, as well as the Cadillac. Of course, we're looking forward to that interview with Hon Hai Chairman Yang Liu. Plenty more ahead. Keep it here with us. This is Bloomberg. Let's take a look at the benchmarks in Hong Kong under pressure. The Hang Seng Tech Index, by the way, set for its worst day since inception. HS Tech currently down by more than 8%. The Hang Seng also under pressure, down about 6%, along with China 8 shares down by 6%. Of course, traders assessing the recent rally, that messaging from the NDRC as well. Also, the tech sell-off overnight in the US, all weighing on those benchmarks in Hong Kong. On the back of that, China back from that Golden Week holiday. There's been manic movements in the stock market there. After gaining as much as 11% at the open, the CSI has given up some of those gains. Of course, if you want to track movements, do go to T-Live Go. Keep it here with us. This is Bloomberg.